Okay, everybody. Now, thank you very much for joining us today on the webinar. Like I said earlier, today's webinar is going to cover a personal pension demonstration, and that will include a full workbench submission, including the attitude to risk profiler, obviously selecting the product, and also the suitability letter. Following that, we'll go through the Officeweb demonstration just to show you how to set remuneration. So first of all, as you can see on my screen, we'll start this in the Intrinsic Gateway homepage. And what we're going to do is set up a client. Now, just to speed through the demonstration, I've already set up a client on the case. So I'm just going to find the client through View Existing Sales Processes. But if this is a new client, what you'll do is go to Start New Sales Process and click on Financial Planning. And then what you'll do is get through to this section, which will be to search for a client. You'll then have the client's details and press search, and the client obviously won't be in the system. So what you would do is create a new client. Like I said, I've already created a client, so we've got Kia Tester, and I'm just going to go into the case and add to the case. So like I say, you would only find that screen there if you were going to be searching for an existing client. If you've started a new sales process with a new client, you'll then come through to the disclosure section once you've found the client's details. So we're just going to complete the disclosure section. So there's only the one client present, and if this is not a power of attorney case. We're going to upload the SCDD document that we've handed to the client. So in this case, it's going to be version 4, and the date will be today's date, which is the 27th of May. And then we'll just go into the personal details section and upload the client's full date of birth, marital status, also confirm if the client has any dependents. So in this case, we'll say no. And whether or not the client has an up-to-date will. So again, we'll say no to that, and it'll just bring up this prompt here, which I'm sure you've all seen, which just prompts us to explain the benefits of the client having an up-to-date will. And then we'll just next through to the next page. Now here you'll have a section to update the client's current address details. So always double check that this information is correct. And then following on from this, you'll have the client's contact details. So just put in there the advisor support team phone number, which I'm sure you've all used at some point. But if not, the advisor support team helpline is 0191 241 0739, and will be available on that number between about 8:30 and 5:30 Monday to Friday. So once you've updated the client's full details, like I say, there's only certain mandatory areas, but we do encourage you to put in as much information as you can. Then we click on Set in the Scope. Now within the Set in the Scope document, you'll just see here the full scope discussion. So as you can see, there's 8 different sections that you can choose. So you've got estate planning, mortgages and liabilities, protection on death, income protection, critical illness, retirement planning, savings and investments. So in this case, because we're looking at pension planning, what we're going to go just click on here is retirement. And the other 7 boxes are not highlighted with a tick all across, so we do need to go in and change those. So you would just click on each section and just put in the reason why you don't want the to go through with that section. So you just put a brief description in here as to why the client's not looking to review this area, and this will then transfer across to the suitability letter, and also just for our own benefit if the case is to go to be checked. As you're probably aware, if you were to look at doing a full sales plan and sales financial plan and review, you would just click on full review, and then that will tick all of the 8 boxes. So once we've done that, we've completed all of the 8 sections, you'll just click on Fact Find, and this will then take us into the Fact Find information. Okay, so as you can see, I have filled in most of the details here, but I'll just go through each of these sections for you now. So you've got the occupation and income details. So this client is employed and her retirement age is 65. She does have an income, which is $25,000 a year. So when you click on yes here, it'll just bring down this drop-down box. And you'll just click in here the client's occupation, which we put as a compliance officer, with a salary of $25,000 a year. And we haven't included any employer's details, but you can do that, and we would recommend that you put in as much information as possible. It's particularly useful if you are doing reviews of the client, and if you think the client's going to be a long-standing client over many years. So just moving down then, if the client has a second income, you can just click on the copy row here, and that will duplicate that box across, and you can just amend that. Also as well, if you've input the details here which are incorrect, you can just click on the minus button and that will delete that whole section. And you can just click on the arrow up if you just want to make sure that that's under the income details section there. Okay. Now, with tax details, our client is a UK tax resident and they are UK tax domicile. They've got no plans to change residency. Their highest rate of tax is currently 20% and they're not contracted into S2P. You don't need to put any details about the national insurance number or the tax reference number. Again, if you have this information, it would be useful, but it's not a mandatory section. So we just click through next there. Just going to move on to the mortgage and other commitments page. So as you can see, our client does have a mortgage, and the existing balance on that is $100,000. Now I've just completed all of the details here. So with the mortgages with Barclays, it's the client's main residence. She initially borrowed $120,000, and it's a fixed rate mortgage on repayment with £100,000 left on the balance. The monthly mortgage payment is £500. Now this is a mandatory section because this is the only time that you will ever put the monthly mortgage payment into the system, and it will automatically carry it across to the budget planner for you. And we've just said here there is an early repayment charge because she's on a 2-year fixed rate, and the date that that's going to end is the 1st of January 2016. We've put down that the client has no other financial commitments just for this case, but if the client did have any car loans or personal loans, that would be the area that you put those in there. And as with everything, you can put any additional notes that you think would be relevant to that page just in the bottom notes section there. So just moving on to the next section, you'll come up to the property and other assets page. Now this is purely just for property, it's nothing to do with savings. So as you can see here, we've put the client's main home in, and we've put that as a value of $150,000, and the initial purchase price is $145,000. That's not relevant because you won't necessarily always know the initial purchase price, but if you do have this information, like I say, it's only going to be useful for you in the future. If the client had any other property, you would just click on the copy box here, and you would just put those details in there as well. Like I say, the system will automatically calculate all of the total assets for you and any of the deficit as well. So just following through the fact find then, as you can see here we're on pension details. So this takes into account any existing pension schemes that the client has. So we've put in here that the client does have an employer's pension available, and she is part of the employer's pension scheme. We've put here that the employer does match her contributions and that she has joined the scheme. Now that's all of the information that we require you to put in there. However, again, with regards to an employer's scheme, it may be worthwhile just putting some notes in the notepad. So that can either be at the bottom of the screen, or you can just put it in notepad just at the top here. And what you might want to do is just put in the level of contributions that the client has and the estimated value of the company scheme. And like I say, it's not a mandatory, we just wanted to say whether yes or no the client is currently paying to a corporate scheme. So like I say, you can add the notes in there, and then we'll just close that. So does the client have any other company pensions? We'll say no. And does the client have any personal pensions? We'll say no. And does the client have any preserved pensions? So in this box I've just put yes, and I've put that our client has an old money purchase scheme with Aviva, and the current fund value is 22,000. We've put that that's not an estimated value, and it can't be reinstated, and it will form part of the estate on death. Now again, you might have several preserved pensions, so you would just copy that across and complete those details. This is quite important that you put in any existing pensions, because this will calculate whether or not the client has a shortfall coming into their retirement, which I'll show you in a second. Okay, so we're just going to leave it as the one preserved pension for now. In this case, like I said, the client's pension costs are quite nominal, quite minimal. So there's no need for any of the primary protection or the enhanced protection that the clients could potentially apply for. So we'll just leave those at no. And we don't know what the projected annual state benefit amount is going to be for this client. So again, we'll just leave that blank. The system will automatically generate a projected annual state benefit if you leave that blank. So that would be my advice. Alternatively, if you do have a guarantee of knowing what the client's going to get in retirement via the state pension, if you're aware of any contributions and things that they've had, then you can also add that in there just to get a more accurate shortfall prediction. There's also just some details at the bottom about the tracing a pension scheme as well. So if the client does have pensions that they're aware that they have, but they don't know anything about them, then that's obviously what you need to contact just to get some further information about that. So then we come on to the monthly outgoings tab. Again, I know you've probably seen this 1,000 times. There's two ways you can complete it. You can either go down the list one by one and add those in separately, or you can just do a total figure. And the reason for this is just to establish what the client's available budget is. So in this case, we're just going to put a total figure at the bottom, and we'll say it's £1,000. So that covers any insurances, any car running costs, any household bills, food shopping, any other savings that they have, just basically all of their monthly outgoings. So we're going to put that as £1,000. As you can see there, you don't need to add in the mortgage because the system has already calculated the mortgage for you. Okay, so following on from that, we'll move on to the other information about the client. So just to confirm that the client is in good health, our client doesn't smoke, doesn't foresee any increases or decreases in their annual income, and doesn't foresee any capital changes in the next 5 years, and has also not used their CGT allowance this tax year. There is no increase in expenditure predicted, and we're not dealing with any cancelled policies within the last 6 months. Now, in this case, we're going to put that the client does have an emergency fund, and we're going to say that they've got £3,000 in a bank account with Barclays. So again, if you'd like to elaborate on that a little bit more, if it's not as straightforward as the client just has, say, £3,000 with Barclays, they might have money in several different accounts. You don't need to go into it in too much detail, but anything extra that you'd like to add, I would just put that into the quotes, into the notes section. So moving on to the financial summary then, this will bring up the other commitments, any mortgage outgoings, the monthly outgoings, and the monthly net income. So that leaves us with a disposable income of £172 a month. So again, if there's anything, any discrepancies, anything that you'd like to clarify, just pop those into the notes section here. So we're just going to move forward to the next page. And as you can see here, if the client does have any savings or investments, this is where you put that information in. So it's currently shown as 0, so we're just going to change that to 3,000. And that will calculate the total net assets, which will be 53,000. So again, you would just copy where that 3,000 is currently held. And as you can see there, once you press recalculate, that will just work out the correct total net assets. So moving on then, you would just click on needs analysis. And with any personal pension, as well as a pension transfer, you would always click on objective-based analysis. The only time you would normally click on budget transfer-based analysis is if you were conducting an annuity case, and you would never click on not required because that will just stop the fact find at this point. So always click on objective-based analysis. And this is where we're going to get the retirement needs analysis shortfall. So this is where we're going to see what the current level of pensions are going to provide in retirement. So like I mentioned earlier, our client wants to retire at 65 and her income is 25,000 a year. Following a discussion, the client feels that 15,000 a year would be appropriate. So that's what they're aiming for in retirement. So you would just put 15 in here and then calculate shortfall. If you did at any point want to change this figure, so if it's coming through as 25,000, but for some reason it should be, say, 29,000 or the figure's incorrect, just click on income here to the right-hand side and that will take you back to the income screen so you can amend that. So we've got here that the estimated annual pension is 7,800 a year. And that's taken into account the existing pension that she has, which is the £22,000 pension pot that's preserved with Aviva, and her projected annual state pension, which is currently £5,700 per year, which is what we base it on, with an inflation rate of 2.5%. So that's where we get the calculation from there. And the annuity rate that we usually work on is about 5.3% as well. So those figures haven't really changed and they're not likely to change until there's any changes in legislation. At the moment, those are the calculations that we work on. So the client has a shortfall of £7,200 per annum. So that's what they need to make up in order to get this 15,000 a year. And the equivalent of that in tomorrow's terms would be £12,093. So it just gives you a bit of a prompt here to say what kind of shortfall the client needs to make up. So that would be £410 a month they'd need to pay, which works out about 19.69% of their current monthly income, or a one-off payment of £76,000. Well, unfortunately, our client doesn't have that right now. So it says, just following on from this, having reviewed this need area, does the client wish to receive any further advice or take any action at this time? In this box, you would always click yes, because again, if you clicked no, we would just assume that you didn't want to go any further with the case. So in this scenario, we're going to put down that the client is going to contribute £100 a month to the pension, and she's not going to make any single contributions. And as we've confirmed, the employer already pays into an employer's pension, so this is purely a personal pension that she's setting up separately. So we'll just follow on to the next section. And it just confirms here about the priorities going forward. So as you remember on the scope wheel, there's 8 different sections that you can select. We've only selected the one today, which is retirement planning, so that's the most important priority. If you selected 2 or 3 different options, or possibly all 8, it would come up here with all of the different types, and you would choose which one is the most important in order of priority. So that's why we've only got the one shown there today. So you just need to put a little summary in here as to why this is the most important area for the client. And this will just follow across to the suitability letter. So again, I would put in as much or as little information as you want in this box, and you can always elaborate on that further in the letter. I would definitely put something in here if the case is to get checked by compliance. This is what they will refer to. And just underneath this, you can see it just confirms here that the client's monthly disposable income is £172. And we're going to say that her available budget is £100 a month, and she has no lump sum budget. Now, whenever you're recommending that they invest more than half of their available net disposable income, it will come up with this prompt underneath. And all it says is we would normally recommend you use more than half of your disposable income towards your goals. And please give us a reason why you wish to use this amount. So although we're recommending that she invests more than half of her disposable income, you would just put a reason in here as to why she's looking to do that. Okay, so you can just put something along those lines, like you wanted to maximise your potential pension pot in retirement and you're happy to allocate this amount. You could go into it in a little bit more detail if you wanted to explain that they get bonuses every so often throughout the year and they're happy that they can afford this, something along those lines. It's very, it's rare that you'll probably get this, but if you do, you just need to give some extra justification why you're recommending that. So following on from that page, what we're going to move on to now is more of the advice side of it, which will take us through to the attitude to risk section. So I'm just going to go into the attitude to risk profiler here, which again I'm sure you've seen a few times, and you'll just complete these 12 questions with your client. So I'm just going to go through these now. Okay, so once you've completed those 12 questions, you just go forward in the risk descriptor, and that will come out of what this client what they've answered the questions as to what they best relate to. So in this case, our client has came out as an adventurous investor, and it just gives you a description there as to what we would class as an adventurous investor and what the strategic asset allocation would be. So in this case, it would be 22% in UK equities and the remaining amount in global equities. Now, as you can see on the left-hand side, you've got the 6 different asset allocations for the different types of investor. So you've got dynamic, and then it just tells you a little bit more about that with the asset allocations there, right down to risk averse. So in this case, we're just going to click on potential returns, which will just take us into it in a little bit more detail and explain what the potential losses are against the potential gains. And just gives us a few examples there. So it's quite useful to go through that with your client just so that you're all managing their expectations there. Now, with our client, like I said, she came out as an adventurous investor, but following a discussion, she feels that she's more dynamic, so just to take a little bit less risk. So we're just going to click on dynamic, take that through the potential returns, again, discuss this with the client, and her chosen risk profile is dynamic. So what we're then going to do is just save and print. Always remember to save and print this. It will then take it through to the Officeweb section. If you don't save and print, it won't follow through to Officeweb, and you'll need to manually go back and add that. It'll also print off the 7-page document, which you can give a copy to your client and keep a copy on the client file as well. So we're just going to close this, and that will now be stored on the Officeweb system, and we can now continue with the fact find, knowing that the client is a dynamic investor, and just again put a brief description as to why this is appropriate and the capacity for loss discussion that we've had with the client. Okay, so again, once you've completed these boxes, they will be carried across into the suitability letter where you can expand on them. But I would recommend that you put a brief description in, like I say, just in case compliance do check the case. Following on from this, we're going to go to design a solution. And this will then take us to adding the quote for this particular pension plan. So with the system being the way it is currently, you would always add the quote manually rather than import from XWeb or quote via the extranet. So I would ignore this top section here and always add the quote manually. If you ever find that you come onto this section and it doesn't let you add the quote, it will usually be because the previous page, which I showed you earlier, so if I just go back to that, so just to show you, if you ever get to the point where you can't add the quote, it's probably because one of these has been ticked incorrectly, or on the following section, you've clicked no here. So that's one of the most common calls that we get in advisor support. So just to make you aware of that, that's usually the case why it won't let you add the quote. So once you come out of the section where you add the quote, you just pop all of the details into here. So in this case, we're doing a personal pension, and we're going to use Aegon, and the quote date today. And it's a regular premium of £100 a month, and no single premium, and the employer is not contributing because they already contribute to the employer scheme. And we're not looking to do any transfers today, it's just a new pension for £100 a month. And make sure that the retirement age matches up with the original retirement age at the beginning of the fact find, so in this case it's 65. And the benefit is for retirement income, and our prediction that we're aiming for is about £15,000 a year. And it's not a top-up policy, and we are applying for the product. Again, if you were to click on no there, where are you applying for this product? No, then the fact find would just stop there and it would assume that you're not looking to go any further. So always click yes on are you applying for the product, and it's not a replacement, and you just put the fund name in here. So we're going to use Aegon, and we're going to put 100% of the £100 a month into Aegon. Now, because it's a new pension and the client is opening a new wrap account, it's not a top-up, and the provider is going to be Aegon, and again it is a new product. So once you've completed that, you would just go to suitability report, so as you see, you'll get the report writer section up here, which is the template, and this will bring across all of the information that you put into the fact find, so it should hopefully save you quite a bit of time. As you can see on the top right hand corner, you've got the document map section, and everything that's highlighted, this is what you need to amend. So there's different sections, like I say, you would just follow this through to the paragraph list, and then you can just manually add and amend all of the areas that you need to that are highlighted. While any of these areas are highlighted, the suitability report will always remain as a draft copy, so if you were to print it out, it will always say draft at the top. So if you think that you've covered all of the areas and it's still printing out as draft, I would just double check that if there's maybe one thing that you've not clicked on. It's usually the signature at the bottom. So it's usually something quite straightforward. So again, if you get the draft and you think you've clicked on everything, I would just double check that you've definitely completed all of those areas. So again, there's a couple of ways that you can save that. So you can just close out of it, and that will save to Officeweb, and it will automatically be saved there for you to view at a later date. Or you can export this to Word if you wanted to save it separately and then go back and then amend it. And then you can manually upload it to Officeweb at a later date. So as you can see, it's just on the top left-hand corner, just this icon here, which is Export to Word. and that'll just save it as a standard Word document. So we're just going to close out with that for now. And then you're going to come to the final screen of the Workbench fact find. Now with a standard personal pension application, it does not require pre-approval. So what you would do at this stage, if you're happy that the fact find is fully completed, you would just click on Close and Create Contract, and that would take you through to the Office web system for you to finish the case. If there was a time when the case needed pre-approval, which is generally with annuities or pension transfers, you would click on Create Contract, and that will take you through to Office web, but it won't close the fact find down. And if there was ever a time that you just need to cancel the sales process and you're not looking to proceed with it, you would just click on Cancel the sales process. So in this case, we'll just click on Close and Create Contract because we're happy that the fact find is completed and we don't need to go back and add anything further. And what I'm going to do now is just pass you over to Andrea from the Advisor Support Team, who's just going to go through the remuneration setting on Office Web and just cover off the documents that you need to have added into this section.
Hello everybody, it's Andrea White here and Samantha's colleague from the Advisor Support Team. So I hope you have found that Workbench sales process demonstration useful and taking you through a pension case on the new system. So now we're brought through to Office Web. I'm just going to show you exactly how you can upload your documentation and set your remuneration on the case to ensure that you get paid any sort of initial or ongoing charges that you might be charging. So once you've clicked on Close and Create Contract, you'll automatically be pulled through to Office Web, which is effectively the back office system which runs in line with Workbench. So what we need to do first of all is make sure you've uploaded all your documentation to the case to support the case that you've prepared on Workbench. So when we click on the Documents tab on the left-hand side, you'll see that it's created a suitability report. So it creates the sales process folder with today's date in there. That's the day that we've created the Workbench sales process. It has pulled through the suitability letter and the ACR profiler that Sam completed in Workbench. Okay, so as long as you open up those documents in Workbench, it will automatically pull through to Office Web. And if you do make any changes to the suitability letter in Word, for example, as Sam mentioned before, you will need to make sure you manually upload the new copy of the suitability letter. So just to confirm how you can upload any additional documentation to support the case, you simply click on the Add button on the bottom corner of the screen here. And you would then just click on Browse, and you just search your local records or files and find the documents that you're required to upload. Once you found the document, you just click on Open, and that will pop the file name into the field there for you. You can add additional documents if you want to upload them all at the same time. You just simply click on the Add More icon there. You can add up to 5 more additional files at the same time. And once you're ready and you're happy that you've got all your documents available, you simply click on the Upload button at the bottom of the screen. As this is a test case, I'm not going to upload any documents to the case today. Obviously it's just a test on the training system, so I'm just going to click Cancel for the time being. And what you would see when you do click on Upload is a status bar showing you how long it will take for the remainder of the files to upload. It is a web-based system, Office Web, so it is very quick. It doesn't often take very long to upload any documentation. And once you are happy that everything has been uploaded to the case, we then need to go into the quotes list to set our remuneration. We simply click on quote list on the left. And this is pulled through the quote that we've selected or we've entered into Workbench. And as you can see here, we've got applied for yes. That must be set to yes before you can set your remuneration. If that's ever set to no, you'll find that the set remuneration icon is actually grayed out. It won't allow you to set remuneration. If you do get that, you would simply click on the apply button in the bottom left-hand corner here. Okay? So as we've already confirmed that we're applying for the product, we can simply move on straight to the set remuneration tab. And we're now presented with a message that tells us that we haven't confirmed how we've identified the client's ID. So if we click OK, we're then pulled through just the client details page. We just need to skip through these tabs and make sure everything in yellow, which is mandatory, has been confirmed. So as we can see here, how is the ID verification stored hasn't been confirmed. So all I'm going to do is click on electronic ID process just to confirm that we've completed the URU process outside of the system. And once I've confirmed that, I can click on save and go back to the quote list. Okay, now we'll try again and set the remuneration. We're just brought through here to the usual remuneration setting pages. And all we need to do is select the product type. And the remainder of the information should have been pulled through from Workbench. If you do have any additional details, for example, the policy number, you can enter this in here. I'll just make one up for the time being. We just need to work our way through the tabs at the top, completing anything that's highlighted in yellow as mandatory. As we're not splitting the fee or the commission with any other advisor, we don't need to enter anything here. I can just move on to the compliance tab. And again, just fill in the information as required. You need to make sure you tick the boxes here to confirm the documents have been uploaded. And again, just on the remuneration tab, and as we're taking an initial fee for this particular client, I'm going to move straight onto the fees tab. And I click on add initial one-off. And we're going to say that we're taking a percentage of the initial premium. So we're going to pop in current value. That was £100, and the percentage was 0.5. And as you can see here, it's calculated that we're going to receive a whopping 50p initial fee for this client. And you will receive this message that pops up, and it basically says that we're linking the charge or the fee to the policy, which is exactly what we want to do. I'm just going to click OK. And again, you'll see that you're presented with a page with some yellow fields here. So we need to ensure that we complete anything that's highlighted as mandatory. For the invoice date, you will always need to put as today's date. Although you're technically not invoicing the provider, that is a mandatory field, so we do need to enter some information in there. We're going to pop in the recommendation initial as the reason for the fee. The advice area will be pension and annuity. And we're going to pop down that this is VAT exempt. The type of service will be an initial service type. Type of advice, we'll pop down that we're independent. And as you can see, it's pulled through the rest of the information for us. Where you can see the question, is the client contact paying? Now, if the provider is paying the fee, that should always be no. And if the client is paying, that should be yes. If the client is paying yourself or Positive Solutions directly an initial fee, that should be marked as yes. But if the provider is paying that fee, that should be no. Okay, so we're going to leave that as no for the time being. And click Save at the bottom. And if we were receiving an ongoing fee as well, we just click on the ongoing template. And again, fill in the information that's mandatory. And we're taking, again, a 0.5% of the monthly premium, which is £100. Once we're happy that everything in yellow is complete, again we can just scroll down the page and click on Save at the bottom. And you'll see now we've got our initial fee set up there and also our monthly fee as well. So we then just click on Save. And as you can see, it automatically defaults you through to the policy list, and it's basically just showing us here that we've created a policy as a result of that quote that we've provided to the client. If we click back on the Quotes List tab, you'll see now we've got Applied for Yes and Remuneration Set as Yes. And if we scroll back to Policy List, you can see the policy that's been generated is now marked as on pipeline. Okay? If you do ever want to check the fee that you set up, you can either do so by clicking on the Policy Details tab at the bottom and skipping straight through to the Fees tab at the end. You can see both of the amounts there. Or if we cancel out of this, you can also check this by clicking on the Fees tab on the left, and you can see our initial fee there, and then our ongoing charge will be in the ongoing charge section. Okay, that brings us towards the end of the demonstration today. Again, I hope you have found that useful. We're taking any questions now, so if you do have any questions regarding the sales process